Good afternoon. It's Brad Langille, CEO of GoGold. GoGold is a producer, explorer, developer, shovel ready for 2025 with a permit to build our next big project and with a strong balance sheet.
Brad, good to see you again. Very good to see you again. Yes, lots going on out there in the silver and gold space. Precious metal space really is talk of the town at the moment. But Mexico, we've got Claudia Sheinbaum has come in. It's apparently all new news. Things are going to be different. What's it actually like on the ground?
We're seeing some movement in the right direction. And if you back up a little bit to the last president, and especially going into the election, there was a law that was passed on the floor, and that law had a prohibition on open pits. And what we know now is a lot of that was politics. Now Claudia Sheinbaum won a landslide in the election. She is definitely pro-environment, she's green transition, but she also knows that to do the social things she wants to do the environmental things she wants to do, she needs to have, her country needs to have a strong balance sheet. And so there has been a lot of movement. I've been to, she went into office on October 1st. On November 8th, there was a very important meeting that we had along with 10 other mining companies in Mexico City, where the Secretary of Economy and the Environmental Authority, they laid out the direction that they were going. And really in that meeting, it was indicated that in Mexico, there would be open pits. Maybe not some very sensitive areas, but there would be open pits. They commissioned a study on open pits and what a prohibition on open pits would look like. And that study really showed that it would be very detrimental to the Mexican economy. So following up on that, just 10 days ago, 2 weeks ago, in one of her morning addresses, she talked about the prohibition on open pits. And she stated that they would be modifying that law to not have a prohibition on open pits. So made it quite clear, there will be open pits. There will be a revamp of that law. There will be open pits. The other thing that they told us was that they will get back to the permits now. They're starting to move the permits. There has been some movement on permits, and we do feel at GoGold, as we've stated before, that for our development asset, we really think we'll have a permit before the end of the first quarter, and that's our expectation. That we will have that, and then we're shovel ready to build a mine. So yeah, it's really going in the right direction.
Well, okay. I'm pleased to hear that, and we're going to talk in hopefully at length in a minute about Los Ricos South and Los Ricos North in the context of the economics. But I want to talk about. Look, it was a tough time with AMLO. Whilst he was in there, he was not exactly making all the right noises to give comfort to foreign direct investors. But he's gone. He's had his time. We've got a new president in place. You had to survive that, though. You have to survive that. And I'm looking at some of the releases you've been putting out since we last spoke on Paral. You've been generating revenue, and that's obviously. Helps with dilution, helps with it cover the G&A. But there was no problems during this whole time with when AMLO was in with regards to those with Parral, was there?
No, not at all. In fact, Paral is really a project that the Environmental Authority likes. See, at Paral, what we're doing is we're cleaning up 300-year-old tailings, and this is mine waste for a mine that operated 300 years, and those tailings, as I think you can see on the screen there in front of us, they're right there. That city was built around that mine. It's a city of 130,000 people. They're a partner with us on taking these tailings and reprocessing them. So cleaning up the environment, generating silver, gold, and now copper and zinc. And the most important thing is that we're putting it into environmental standard of the 21st century. That would be the same as the US or Canada. So Paral we're one of the real first companies who have applied technology around agglomerated heap leaching. That's mixing these old tailings with cement and making a pellet that we put out on a heap leach, and we treat on a heap leach. So it was a lower capex to build, a low opex, but we developed this technology. And that's important, Matthew, because in that meeting on November 8th, I had an opportunity to talk to the director of mines one-on-one for a couple minutes. And I mentioned the Paral project and that we had developed this new technology. And he said, okay, that's so important to us because one of our agendas under the new president is to address and see if there's ways that we can improve the environment and make 500 tailing sites in Mexico that they have, make them viable. So very, very excited about what we're doing and this technology that we developed in Mexico. There was follow-up meetings after that one, and we'll be working with them closely on this technology that we've developed and how it might fit into their agenda. And of course, that helps us a lot, makes us front and center as we're getting a permit for an underground mine, not an open pit mine right now, but an underground mine at Los Ricos South. So here, I'll tell you the big things that have happened with Parral though. Zinc circuit. We started off the year not so well in 2024 because the zinc levels had built up in our solutions and they were interfering with the leaching of gold and silver. So then we built this zinc circuit. The zinc circuit has reduced the amount of zinc in the solutions, and as we hoped, it has really improved the leaching of gold and silver. So now our production is going up, up, and our cash flow per month is increasing to the point that we're about $1.5 million of free cash flow a month right now in the operation. So Parral, this market, commodity price, is great. And who does it benefit? It benefits the producers. It hasn't kind of trickled down too much into the developers and especially not into the explorers, but it really benefits the producers. So now, 2025, we should be producing some real meaningful cash flow here, as it has in the past. Just in 2024, it started off the year, we knew we had to get that zinc level down, and it worked. So Paral's going to be it's not the driver of the company, but it helps us with the environmental, gives us cash, and we develop new technology that the government's very interested in.
Well, I think people are going to be very interested in what the relationship could be with the government. And like I say, they would all be sort of small but profitable projects in their own rights, and it's non-core to you. But at the same time, if you can monetize that somehow, I think that's fairly interesting. And I'd be very keen to see how that progresses in 2025. Very keen indeed.
If we can develop this further, because what's really, really important agendas for this new government, number one is social. That you have social license to build a mine. In Los Ricos South, they have confirmed that with us. They said, you're doing a great job there. You definitely have social license. You look at Parral, they're our partner, the municipality. We pay them $75,000 US a month, which would represent probably 10% of their municipal budget. And we employ a little over 300 people. And by the way, in the company, if I have the numbers right here, yes, no, it's not quite 300, 296 people, and 5 of us are not Mexican. So we're very much viewed, and we want to be viewed as a Mexican company. I've spent 28 years in the country, most of my career. There's so much talent there, so much engineers. It's a country with a long history of mining. So we want to be part of that. And, we bring this, which is clean up the environment, generate jobs, partner with the community. It's everything, ticks all the boxes as far as mining.
Well, it's kind of interesting. What it does for you is obviously gives you the ear of the government, because you're able to talk to them about this and obviously you both of your projects. So it's really interesting to me. I wonder if we can't get into the numbers or remind people what we're looking at the moment with the current economic study. I know we're talking about the DFS coming out, but remind people of what the numbers broadly look like with Los Ricos South and Los Ricos North.
You know, things have changed since the PEA that we completed in Los Ricos South. Now, the PEA was always focused on starting with an underground mine, but having more of an open pit component. And we could always pivot back, because it always started as an underground mine, and have more open pit. Open pit will give you better NPV. But you always have to look at the social ramifications as well, environmental social ramifications. And in Los Ricos South, the way we planned it, the way we're permitting it now, is as a 12-year underground mine. Los Ricos North, a little bit different, and we're at an earlier stage as far as the economic studies around it. It's a PEA, and so in Los Ricos South, we moved now to definitive feasibility study. And just to make a distinction, you're moving from resources to reserves. And, there's a big difference. And a resource is, kind of what you have with potential economic viability. But a reserve and a DFS is a study where you do a lot of testing and you get to plus or minus 10% of accuracy. And it has to demonstrate the economics. So what you cannot do is you can't use the inferred resources, the lowest level, the lowest category of resources in that economic study. Once you go above a PEA, you can't use the inferred. So we would have had, under the old study, approximately 400 million NPV in the PEA. If you just look at kind of the measuring indicator, it would have been about around there. And the new study, the DFS, focus all underground. Yes, it's a bit more expensive, so probably all-in sustaining costs will be around that $12 mark, and then the production will be about around the same, about 8 million ounces a year. We think it'll be around there for the life of mine. Now I'm talking numbers. We have to wait for the study, Matthew, the final study, but we're well advanced, and probably the capex will be a bit over 200 million to build it. But an NPV should be around that 350 million NPV. So you take a little bit of a hit, but then again, you get your permit now, and we'll see what the environment looks like a little further down the road. And maybe that open pit would be a bit of an open pit there, improve the NPV. That's Los Ricos South. Now, Los Ricos North. Los Ricos North, there's really hardly anybody up there. And now I do believe there will be open pit mines in Mexico. There will. And she's basically said it. No, not basically. She said it, that there will be open pits, and the revision to that law that there will allow open pits. So in Los Ricos North is planned today in that early stage study as all open pit. And it has a 413 million NPV, and that would be including inferred. So really, that's probably still doable, and there could be open pits up there. What we really want to do here is we want to, with a permit, break ground. Hope we'll have that I think we will have that by the end of the first quarter. We break ground, we're shovel ready. We got lots of offers of financing as far as the debt component. We start building, get that mine up and running. I mean, you imagine a GoGold, we're getting some benefit, or we're going to start getting a lot more, I think, from Paral, because it's really kicking in well now with that new zinc circuit. So we're 2 million ounces. We will have our first pour 24 months out from breaking ground, and then about 6 months to get to full commercial production. Los Ricos South be about 8 million ounces a year. Okay. So we're going from 2 to 10. Right?
So you're now sort of getting to the territory where you're production wise, same sort of profile as like a Heckler.
I think more probably Los Ricos South would be more production profile, more like maybe like a Silvercrest.
Right. Okay. Well, okay. And obviously, with this year's acquisition by Kerr, those are heady numbers or heady valuations, shall we say? Let's look at how you get there and how close you are to that. You mentioned, look, here's the thing: the companies that kind of come on here, it's clear that producers are being rewarded. You said it earlier yourself in this conversation. It's also clear to us that advanced developers who can show their near-term revenue generators, especially in a market like pricing like it is today. So I want to try and understand here. I know you're good explorers. You're finding the answers. You got the answers. Now what I want to see is, how does this thing get financed? How does this thing get built in a reasonable time frame to me? So you mentioned you're speaking to people that in terms of the money, offers of money is there should you get to where? What do you need to show?
Really, we could probably sign term sheet today on the financing because we have such a strong balance sheet. We have over 72 million US cash in the bank, and we're building cash now. So we have the equity component. The debt component is there for us. And we're just looking at the real details of all the financing offers, and we'll pick the best one. And when I say the best one, it's not just cost of capital. We're going to pick one that lets us have flexibility, because the next thing here is Los Ricos North. That will be the next mine to build after Los Ricos South. Now, that we go from 2 million at Paral. We've been operating for 10 years at Paral, and we go to Los Ricos South, say 8 million. And then Los Ricos North, it has a profile of over 8 million in that PEA. So we're moving up towards more like a 16 million, moving more into the range of more like a mid-tier, similar to a Hecla or similar to a First Majestic. A production profile would be similar, but I'm not saying we have as many reserves as them, but we're similar profile. So, and it really, you think about it, we have built in Los Ricos South the next two mines for GoGold that are in the queue. That flexibility of financing, cost of capital is important, flexibility is important, because when we're working on Los Ricos South and we're getting to that first pour down here and then commercial production, at the same time we want to circle say 15 million bucks, and we want to be doing the infill drilling up here, getting a definitive feasibility study done in the north, and getting a permit in the north. So we can be rolling into full commercial production in the south, rolling into another build in the north, and one of the similar size. So that's quite a growth profile.
Right. And
2 million, 8 million, 16 million.
Exactly. And as you say, that puts you in good company. That's for sure. Can we talk about some of the other kind of hurdles that you need to kind of get through? And I know we have discussed these in the past, but the nearer you get to the finish line, the more important it is to kind of get that kind of certainty as an investor. So social license. Okay, I think everyone stopped using the word ESG finally. We're going into, you've got new government. How are things on the ground locally at state level for you?
Really, really good. The social license is really good. Confirmed by them, the government, that, we have in the community petitioning the environmental authority to give us our permit, so the social license is great. We've done this before. This isn't mine number one. We've done 4 mines before. So, we know that is a critical part of building a mine. It's done, and this administration is correct on that. They're saying you're not going to get a permit if you don't have a social license. The days of, forcing a community to accept a mine are gone. That's fair. We've always operated that way in Mexico. We've always built that relationship with the community. So social license we have. Definitive feasibility, that's really that's a mute point. Yeah, we're a bit behind in getting that study out, but listen, we didn't have a permit. We said we can make this study better. Let's do more testing, let's do more work, and we're waiting for a permit. So that'll come out in January. We'll have the study out there, and it's a very, very detailed study.
Okay, so
And then,
so it's delayed because you wanted to find more efficiencies. This wasn't the case because you found something you didn't like.
correct,
This is like, right, okay,
correct.
just so we're clear.
And
Yeah.
risk and limit risk. The more engineering you do, the more testing you do, then you're not learning as much you're not learning in the field when you build it. You know, you got it well planned.
We're learning with my money.
Exactly. Yeah.
Yeah.
So we want this to roll out really well.
Yeah.
You know.
Okay. Okay. And so I'm wrapped up in all of that. Is there any sort of, land right access issues? That's all just
all done.
All done.
It's all
okay.
For example, a big part of building a mine is knowing that you have the power. And here we have from a hydro dam, so good green power, 36 kilometers away. We've already signed the contract, paid down a couple $1 million. We secured it, and we can build that power line, which is all engineered, all costed, on existing right-of-ways. We don't have to negotiate new right-of-ways. On the water, very similar. We're dealing with the local landowners who have given us a lease to the land, long-term lease, and they're going to and a long-term water agreement as well. So, it's we're ready to go. It's we complain about waiting a year and a half for a permit in Mexico. Try to get a permit in Canada, you're going to wait a decade. So, and things are now we know we're going to be getting a permit. We always knew we'd get a permit. We were looking for an underground permit. By the open pits opening up, which is going to affect a lot of the other companies out there operating in Mexico who are more focused on open pit. It's going to be very positive for them, the first one that's granted here. But, hey, we feel we're very close to getting a permit by all the interactions we've been having with the government.
Right. Well, and talk about the engineering bit, okay? Because like I say, when the last few years you were trying to find efficiencies, etc., but you also are very conscious that at the beginning of this year we had a slew of monumental cock-ups by various companies. Some of their own doing, and some which you could argue were preventable if they spent a bit more time and thought and a bit more money and done it the right way. But you must be conscious of that as part of this design.
We're very conscious. Best practices. That's what we're doing. Like for things like tailings have a big issue, and we're doing detoxified dry stack tailings. So that's the best practice. But on top of that, what we're doing, this underground mine we're building, and we're putting in all these working places. 11 meters wide average stope with for the underground mining, long hole mining. But those voids, we're taking those tailings, we're mixing them with cement, and we're pumping them back into the mine. So it improves safety because of ground stability. It means that you can mine right up to this cemented backfill. So you're not leaving behind mine loss in a lot of pillars where you'd have to otherwise. And guess what? You get rid of most of the tailings from surface. They go back down where they came from, underground. So everything's best practices. And one other thing I'd like to just touch on for 1 second is that on the exploration front, and I mentioned earlier, and I think you mentioned that you're not seeing that great commodity price is certainly affecting the producers, and the developers starting to get some benefit, but the explorers nothing. And that's when we made a choice a year and a half ago that we said, hey, we're going to charge right ahead and get Los Ricos South built. I mean, we're building something similar to the size of the Silvercrest or Los Gatos. So we wanted to do that, and our investors were saying, hey, yeah, we've seen press release after press release, kilos and kilos of silver every couple of weeks, but what's it all mean as far as economics? So we did that. It becomes, if you think of that Lassonde curve, it becomes a period, maybe some people, you lose that excitement of discovery. But then we looked at that and we said, well, what about this? We do know that the old records of this mine operate 1908 to 1929. They left in 29, more because of, revolution in Mexico, not because they ran out of ore. And in 1927, they found this zone down here. And we have all the old records. We were able to find them up in an archive in the United States, and we've done so much work around those. But the really interesting thing was they were down into here, and they were cutting crosscuts where they were seeing up to 300 ounces per ton of silver. And, they were seeing things more on the average of, well, exactly what we're seeing up above, 17 meters of a kilo and a half. So, you're thinking about the development of value in the company. You say, well, it may be sometimes a little painful to bite the bullet and build the mine. A lot of explorers will say, well, we don't ever want to be miners. Sometimes you have to be the miner. We've done it 4 times in the past. But here we said, well, now we're doing that. But what if, while we're building the mine, we can be doing some drilling and seeing if there's another mine down below the one we're building? And all indications with those values are that there's good potential for that. So we started drilling there. We drilled the first hole. We're on the second hole right now. They're deep holes. They're 750 to 800 meter holes. But we're going to start using some technology like we use in the oil industry, with some real, you go down one primary hole and then you go off that hole and you do horizontal drilling. So we found a real good consultant contractor who's doing that, will be doing that for us. And wouldn't it be exciting if at the same time we're working towards first pour up here, we can announce that we have another one down here, down 300 meters below our reserves. I mean, I think that would really ignite some excitement about discovery and value again. So beyond having the next, the one mine in Los Ricos North, will be developing it to permit and definitive feasibility study for the next one to build. Is there another one right below what we're building, which then we use the same infrastructure, the same mill? So that's another thing we're doing, and we're pretty excited about that.
And so next year, how much will you be expending dollar terms, or how many meters do you think you'll be chasing?
We're starting off here with a $3 million US program.
Okay.
And that will give us about 20,000 meters.
Okay.
That'll give us a good look to see if it's down there.
Okay.
But watch for that to roll out. That could get pretty exciting, I think.
Yeah, I think it's interesting, actually, that the dynamic of the market has changed. People having to, like, historically the market worked a certain way, and it's clear in the last 4 or 5 years it has not. The people expecting catalyst moments to change their fortunes, it didn't. Catalyst came and went, and no one cared. So I think things like Paral, in terms of generating revenue, super good initiative from you guys, and obviously say free cash flow, and you're getting rewarded for that now. But the other thing that was the other kind of perception, sort of the old way people value the market, was that exploration, blue sky exploration, that was rewarded when you made a discovery. That isn't happening now either. So this whole thought of let's get into production early, you may say, well, it's a little bit less efficient, but man, people are rewarding cash flowing projects. And if you're doing concurrent exploration, maybe that's the icing on the cake for those investors as well. So it's interesting the way you're coming at it. Very interesting.
Yeah, I can't see how we have another big discovery down below a mine that's being built that can't really excite people around value. That would be the only. We made the choice a year and a half ago that, hey, the exploration throughout the district without a build was just not having much effect anymore.
No, size for the sake of size is not working. And I think we've seen lots of companies change their business model, reduce the kind of capex on large projects, or look to get into production, kind of Australian style, get into production sooner rather than later, and build from there. It's only good. It's only good news. Interesting, Brad. So what are we looking forward to next year? What do we look to see from you?
Next year, it's going to be DFS in January. It's going to be hopefully, I say hopefully, I'm very confident it'll be first quarter we'll have a permit, and then we break ground We're going underground. We're driving that ramp down there, building a mill. It's all engineered. And really, in that first quarter, we're going to see the first indications of, is there something else down here? So, and out of all through that period next year and through the the next 24 months of build, you're going to see stuff coming out of the north as we move that along as well. So it's in the queue to be the next mine. Also, first quarter, look for the results of this quarter for Paral. I think they're going to be very, very positive, and look for Paral to be a very important contributor of cash while we're building the next mine. It's been 10 years at Paral. I mean, it's we know a lot about that business, that tailings business, and there may be other opportunities coming. So we got a lot on the slate for 2025. It's going to be a busy year. And, the only way we can have construction, exploration, and all this come together at the same time is because, our team at GoGold is multifaceted. I mean, we have great explorers, but we're producers, and we built mines before. So we got the technical team to do both.